welcome to MF Primer. I'm Lisa, and this is a show about all those technical terms, the jargon that's attached to mutual fund investing and making it simpler for you. We are starting the series with a term called benchmark. If you are a mutual fund investor, you must know what a benchmark is. And what is it? Well, let's explain a little bit before that. If you had seen some of the earlier episodes of another series called Mutual Fund Basics, right here on FIRE's YouTube channel, you would know that a mutual fund scheme is essentially a portfolio of securities. It could be equity, it could be bonds, or it could be a mix of both. Now, this portfolio has to give you a return. लेकिन आपको कैसे पता कि ये पोर्टफोलियो का रिटर्न या पोर्टफोलियो का परफॉर्मेंस अच्छा है या नहीं? To judge this, the benchmark is of great use. Also, remember that you are paying your mutual fund manager a fees. You don't see it, however, it is embedded in your NAV in the expense ratio of the scheme. There is a fees, a fund management fees, which you pay to a fund manager who is managing the portfolio. Now, when you are paying the fees, obviously there is a minimum level of performance that you expect from the fund manager. But what is this minimum level of performance? That's what the benchmark is for. The benchmark really sets the minimum standard of performance for a fund manager against which you can judge whether the scheme is doing well or not, in which period does it do really good, in which period does it not do very good. So that's what a benchmark does. Every scheme has an assigned benchmark. Regulation also requires it. At the time of launch of a scheme, the benchmark is notified. It is in the scheme information document for you to look up at any point in time. Usually the benchmark will not change during the life of the scheme unless fundamentally something has changed in the scheme or in the original underlying benchmark. Let me give you an example, and please don't take this as a recommendation for a scheme or anything like that. It's just randomly chosen and alphabetically really. So Access Blue Chip Fund is a large cap scheme. Blue chip actually means the largest of large caps, and hence the benchmark of the scheme is Nifty 50, which represents the top 50 companies by market capitalization in the domestic equity market. So that makes sense. That is the right benchmark for this scheme. If you look at a debt fund, and let's go the other way around, UTI Short-Term Income Fund has the benchmark CRISIL Short-Term Bond Index, which is a index of short maturity bonds. So the relevant benchmark has to go with the scheme so that you can assess whether the scheme is doing enough to justify the fees or not. And do you know that even fund managers have internal targets around benchmark performance which are used to assess how well they are doing? And this is over periods of 3 to 5 years. The internal targets could be say 2% or 3% annualized outperformance against the benchmark. These targets do exist within asset management companies to assess how their own fund managers are doing. So the benchmark is really important, and understanding how it's relevant to your mutual fund scheme is also important. A lot of times fund managers will sort of construct a portfolio also with the benchmark as an outline. So it is a very important part of the mutual fund investing process. As investors, we get more carried away by comparing the performance of a scheme with another scheme. But first, you must understand how the performance is versus its own benchmark, and then try and pick a relevant scheme in the category to compare. But don't miss out on benchmark performance. So there you have it. You know what a scheme benchmark is and why it's relevant to your investment process. Do keep tuning in to MF Primer to know more about all these jargons that are linked to mutual fund investing.